What's up guys, hope everyone is doing well. In this video I'm going to be going over some updates for Bitcoin, and it's not looking the greatest. Fear and greed is hit within the last couple of days, 21, 23 presently. Although, despite all of the massive amounts of fear, the people calling for the bear market to be on its way, there's still, albeit being tested quite significantly at this point, plenty of bullish structure intact. If you look here at this 12-hour chart, first thing I want to point out is something I've pointed out a few times over the last number of videos for Bitcoin, but we can see here the price is right above, close to testing the 800 estimated moving average here on the 12-hour chart at around $98.2 thousand. The last time the price tested this was all the way back here during the first week of April 2025. Bitcoin then bounced here from 75,000 all the way up to the current $126,000 high. Going back even further, we can see that the lows set here from the move here from 75,000 approximately all the way down around 52,000. Found support along the 800 EMA, and even going back to really the very beginning here, as you can see, of the current bull market, you can see that the price is grappling here, having a battle with the 800 EMA, eventually flipping that into support, which as I've already demonstrated here with these recent three instances here, going all the way back to August of 2024. This has acted as crucial bull market support. Is a very core structure of the current bull run. So maintaining this is going to be very, very important, I believe, going over into the next few weeks, leading into the end of this month and beginning of December, which is when quantitative tightening will end. And with that being said, as one point on the fundamental landscape, the fundamental landscape still just looks very good, better than it ever has, specifically saying that within the context of crypto Bitcoin adoption in general and the acceptance of it, as not in the past. For example, prior to the institutional interest we've seen from BlackRock, Vanguard, through the Bitcoin spot ETFs. So here looking at the 12-hour chart and these other technical charts in context of this, testing these crucial supports here appears to be pointing to the fact that it's not quite all that rational to just yet say that the bear run has begun and the bull run is over, although a few more structures get invalidated and broken, that will then become the more likely than not scenario. Lastly, here we can see with the trend-based Fibonacci extension here going from August 2024 to January 2025 to April 2025 using the candle closes rather than the candle wicks. You can see that the 382 here has been a crucial support going all the way back, horizontally speaking, that is, to the first half of May of this year. Generally, as you can see here with this double top set here, it's just kind of been a zone of importance here, cutting right between both of these zones here, where it was initially rough approximate resistance, now turning into rough approximate support. So holding this again in confluence with the 800 EMA is going to be very important. Seeing the 12-hour, really the same could be said here for the daily as well, because these are essentially the same charts. But this descending resistance here is going to be very important to get above, which is depending upon when and if this even happens, somewhere around 107, 108,000. Still have these horizontal zones here at around 111 to 113, then around 115 to 117, 118. And then above that, the 618 here, that same Fibonacci extension, trend-based Fibonacci extension, sits at around 120.5 thousand. Those are going to be very crucial to be watching out for towards the upside. Towards the downside, as I've been saying, my final line in the sand here will be losing here on specifically 12-hour, somewhere around 76,000, approximately 75 to 80,000, depending upon which time frame you look at, as we'll see here as we go forward on these higher time frames. But so far, you can see that the structure is generally still intact for the most part for the bullish case, although things are encroaching upon genuinely scary territory if indeed we do see Bitcoin head down below 98, 95, especially $90,000 over the coming weeks going into December. If we look here at this week, or this daily chart rather, something I've pointed out in past videos, specifically with the similarity that as you can see here towards the end of the bull run going into the end of 2017, basically the structure that is seen here is kind of this ascending wedge, which then upon the third, moving up to this third peak point here, it then shoots above, deviating towards the upside above what resistance was in place for the wedge pattern. And we can see that here, again, like I said, going into the end of 2017 for that bull run. And I believe we can see the same thing here where we're seeing this kind of ascending wedge-like pattern right here. And the logical inference here would be, technically speaking, to see a break, a deviation above what this resistance would be here towards anywhere around $180,000 or so, upwards of $230,000, $250,000 approximately. Now, if we look here at the RSI, we'll see this notable peak here to begin things off going back to June 2016. This would be comparable to the peaks set here on the RSI of October 2023. You can see that initially there was this horizontal resistance set on the RSI, very similar to what could be seen here from October 2023 to March 2024. Afterwards, we saw the price here then really start to, parabolically speaking, pick up, whereas the RSI entered into a downtrend while the price here was in a parabolic uptrend. And we can see the same thing here, although parabolic might not particularly be the best word used for it. Overall, we can see that the price of Bitcoin here has been going higher and higher here, higher highs, higher lows, macro, speaking in the macro sense. Whereas we can see the RSI here is like going back to 2016 to 2017 in a downtrend as the price is continuously, as I said, made higher highs and higher lows. So the idea here, as I said, what's interesting about this is the very end, if you were to measure each of these runs here around 145%, 233%, 150%. This last move here was 600%. So this final move here, which would be the stage that we're currently in here, for the current bull run, was the most volatile, most explosive move of the entire 2015-16 leading into the end of 2017 bull run. So that's something to really think about and factor into this, because if we're seeing a fractal-like repetition of a pattern that looks very much so similar thus far, then we would expect to see that the final move here towards the upside in conclusion with this pattern to be the most explosive of the current bull run, which lines up with plenty of other analyses I've done in the past videos, and what I have been saying for nearly going all the way back to the downtrend, the consolidation period from around March 2024 here to September 2024. I've been saying that the next move of the bull run would be the final one, and it would be the most explosive one, where we can see the first move is here, the second move is here, and I still believe characterizing this entire move here upwards beginning back in September, October 2024 is the final move of the current bull run. Moving here into the 2-day chart, we'll see that the RSI is now hitting the 382 level, which every time this has happened, go back here is the bottom of this downtrend beginning back in December 2024 at around $108,000 approximately. See the same thing going back here to this range low during the correction from 75 to around $52,000. And then essentially we'll just rinse and repeat. You can see each of the main lows going all the way back to the end of the prior bear market here, bottoming out on the 382. Same thing here at approximately 25,000 for the second low here. And as I said, this is exactly where, although the price, or rather the RSI, is encroaching upon this level of the RSI, could still technically go a bit lower. In tandem with that, we are seeing the uptrend here. As you can see, this blue zone, these 3 dotted lines being tested right at about the median. Also the 200 EMA, which here, as you can see, like the 800 EMA gone over on the 12-hour chart, plays the same role. As you can see, zooming out totally, it is very crucial bull run structure, finding currently confluence with the overall uptrend channel that has characterized the entire bull run since the end of 2022. So as I said earlier, it's very much so make or break for Bitcoin, I think, going into the end of this week, predominantly for the current month of November. Historically, November is or at least one of the most bullish months. October didn't pan out exactly how history says so, so potentially we should expecting that to be the case for November. But all in all, really, despite the extreme levels of fear The sentiment right now really is about as, I think, neutral, technically speaking, in terms of psychological status. But right now it seems to be very neutral and very ambiguous. There's plenty of reasons to say that the price is going to go up from here towards higher highs and further price discovery, but there's also a good reason to be cautious and think that this is only the earliest moments of the final rejection, that being at approximately $126,000 of the current bull run, going into the what would be the upcoming bear market, although there are still plenty of key structures intact. If we move here to the weekly, really starting to get into the more substantial analysis, something again that I went over in the last video here, very important, this lighter blue SMA, the 50 SMA. Again, we're seeing as I'm going across these higher time frames, or from the lower time frames into the higher time frames, we're seeing these SMAs, the 800 on the, or rather it was an 800 EM on the 12 hour and the 200 EMA on the daily chart. Here on the weekly, we see the 50 SMA acting as support since the bull run began, currently being tested. Right now, the candle is sitting below this. We have not seen a candle close below this SMA since going all the way back to the beginning of the past bull run back around December 13th of 2021. Eventually the price came down lower, retested that, and rejected into the brunt of the bear market leading into the end of 2022. So getting a close on the weekly below this is not going to be all that good. I do think there's potential for a candle close or two at most. It would still, with that potential room for a reversal, likely to be some sort of V-shaped reversal, a very quick recovery, which I think in general that's what Bitcoin needs to see over the next, currently the weekly candle has 4 days, 17 hours left. I think that that is the best case scenario, that we don't see a weekly candle close below the 50 SMA and we see a quick bounce from here. There might, over the next day or two, given that there's 4 days left, we might see some lower lows, potentially heading down to about, approximately, I'll put it around here, around 94,000 or so. I mentioned weeks and weeks ago, probably over a month, maybe 2 months ago, that it's totally reasonable to see Bitcoin come down to around $90,000 to $95,000, still find support and come higher. So if we do see something like that, we would see a move down this line, maybe with some wicks down to low 90,000 at the dot just about, and then a quick recovery. It could be a fake out of this 50 SMA just to recover quickly afterwards. But it also could, on the flip side, be indicative of coming down to this prior horizontal low here at the candle close around 78.1 thousand, with the wick down to around 74.2 thousand. So that is going to be very crucial to hold on the beginning of the higher time frames here. At the weekly, if you see weekly candle close below basically 78,000, or really even right at it, I think if it starts to come down to this, then it's essentially over, speaking in the sense of the bull run being over, because this will set a macro lower low here on the higher time frames, losing macro horizontal support. You can see that this horizontal support has been held consecutively throughout the current bull run, whereas if we then lose this horizontal zone here, it's not going to be good whatsoever. So getting back above, at this point, looking at these weekly candles, approximately 114 to 115,000 will start to signal some hope. Lastly, here for this weekly chart is the 12 and the 24 SMAs, blue and purple SMAs. You can see here as I zoom in that these have not crossed just quite yet, but if they do cross, every single time it's happened in the current bull run, it has signaled a low. Last time it happened was right here, right at the low of March earlier this year, towards the end of March that was. You can see it happened here, and the price still did go down a little bit, but you can see as soon as it happened was when we had the major wick down to around basically $50,000 at the beginning of August of 2024. So again, for all intents and purposes, it's really marking the low here as the 50 SMA here was being met. Go back to this instance here, mid-September 2023. You can see this marked low. Actually happened a bit after the low, but still the trend here is these three instances, with this upcoming fourth one potentially also hitting the 50 SMA. It appears that if this happens, history shows that this will aligned with a bounce somewhere within this general zone or so, maybe with that potential going down to around 90,000 approximately, finding a quick V-shaped recovery towards higher highs and further price discovery going into the end of this year. And at this point, with how extended things are, progressively so it's gotten during the current bull run, it's likely going to stem at least into Q1 of 2026 if I had to imagine, taking it to be the case that we do see Bitcoin actually find a reversal towards the upside here. Lastly, if we look here at the RSI, we'll see that with the recent downside we've seen in the price action, you can see the RSI is hitting the 272 to 236 zone here, the horizontal support zone that has upheld the entire bull run structure. So again, nobody really cannot emphasize just the significance that there lies in the testing of the current structures pertaining to the present bull run of Bitcoin. The bottom of the barrel, most macro, most key and core bullish structures of the current bull market for Bitcoin are being tested, and it really is, as I said earlier, make or break going into the rest of this week, going into the rest of this month as we lead into December. If we look here at this weekly chart, we're testing the bottom of the uptrend channel here. You can see with the various Fibonacci levels. As I said in one of the last videos, let's just entertain here. If we see the bear run begin, basically, if this is the case, the bear run has already begun, and here somewhere around $126,000 was the all-time high of the current bull run. I think the next low will be somewhere within this purple zone here, anywhere from around $55,000 to around $68,000 or so. Although if this is the case, this would only be around a 50% drop. The last bull, or bear run rather, here was around 77%, with the whole idea of diminishing losses in bear markets. Then we can imagine at least like 70% would be met. So that'll take the price all the way down to 34.5 thousand. This right here, entertaining this hypothetically, this drawdown to around $34,000 or so, if the current bull run has set its all-time high here at around $126,000, to me, further affirms the case that Bitcoin hasn't actually topped out yet, and there will be one more move towards the upside here. Because just zoom out even further here, if we do actually see Bitcoin move all the way back down to here, somewhere around $35,000, stay here for a little bit and bear market consolidation, whether it's towards the downside here, relatively sideways. Then we see another bull run, which, as history is showing with the trends, each bull run and bear run is getting lackluster. They don't have as much strength as they did in their past iterations. So I'd imagine that we would just continue to see a bull run that would maybe just only go up to around 200,000 the next time around. And at this point, really the whole idea is that if this is the case, if Bitcoin's actually topped out here, then we're just going to see the most boring, limped, just lack of strength, ascending bull market structure that Bitcoin has ever seen, which to me seems to be quite at odds with the whole notion. It's looking at the fundamental landscape of the institutional adoption and interest, the growing nation-state adoption and interest. To me, it seems that rather than entering into this form of bull run structure here, that we'll actually continue to see a further movement towards the upside here, maintain a more proper, a bullish structure that coheres more with past data, and then come down for Bitcoin to top, or rather bottom down somewhere in this purple zone, and then leading into 2030s, early to mid 2030s, we'll see something along these lines. Then we'll see Bitcoin leading into the end of this decade, then shoot up here towards 2030s, towards around $1 million or so, something along these lines. I think the upcoming bear market and bull run will be some of the most agonizing, or probably once we begin to experience them, the most agonizing bear market and bull market ever. If we here, zooming back into the current bear to bull market transition, if people thought this bear market was bad, or if people are thinking that this bull run here is bad in terms of just how ambiguous it's been and lackluster comparative to past iterations of bull runs, then just only prepare yourselves for the upcoming bear market and the upcoming bull run. It's going to be, I think, far worse, far more lollygagged and agonizing to go through, because it's just not, you know, one pump and done. Like, for example, basically here for 2020 to 2021, we're entering into a different paradigm of Bitcoin maturation and adoption, where we're going to see this more structured, elegant stair-stepping in Bitcoin for various reasons, not only technically speaking due to the maturation of Bitcoin in that context, but also just as we see institutional money come in, we see nation state money come in, we see the broader, more widespread global adoption of Bitcoin. It's becoming more of a recognized asset. It's not only growing in technical maturity, but it's also growing in the real world maturity, and it's obviously going to give it a different character of price action as we begin to enter those new eras of really just personality, to put it in that sense of Bitcoin. Now again, here looking at this 2-weekly chart, this is one of the all-time high signals. It goes all the way back to January 2011. So this is a very macro all-time high indicator that is yet to have fired yet, alongside all the CoinGlass 30 CoinGlass indicators, which none of them have still fired. Look here at this all-time high indicator with the accumulated distribution open interest money flow index. This is also another all-time high indicator. Here we can see the Pi cycle overlaid as well. I've gone over this plenty of times, the Pi cycle here as well. For those 2-weekly charts, nothing has fired yet. Nothing has signaled that the all-time high is in. And this brings me to this monthly chart here, the Bollinger Bands, which I've gone over plenty of times recently, and I think, to me, at least in my view, is the biggest thing that is keeping me at the present moment with what's been going on and how stagnant Bitcoin's been, and how there was the pump up to $126,000 and the record-breaking worst liquidity flush event in the crypto space that's ever happened. Despite all of that, despite the absolutely, fallen through the floor sentiment, extreme fear, yet Bitcoin's been trading sideways at approximately $100,000 to $120,000 for a number of months. Looking here at this Bollinger Bands chart, we can see that the compression of the Bollinger Band is currently sitting at 89.09. This is, again, continuing to set records for insanely compressed Bollinger Bands. The compression is as intense and significant as it has ever been in Bitcoin's history, and this lines up with the depressurization events. The depressurization events are each of these times you can see the Bollinger Bands diverging here and making these exaggerated U-looking shapes, where we can see each time this happens, you can see that the beginning of these depressurization events, the beginning of the divergence, lines up with the most explosive, the most parabolic moves of every single bull run, going all the way back here to 2010 to 2011. Literally, this has been something that can denote the end of a bull run. If I said bear run earlier, I meant to say bull run. I don't know why I continuously do that. I do that with so many different things, not only here in these videos, but in my personal life with mixing things up like that. I mean, I even sometimes, just to kind of go off on a tangent here, if I am feeling hot or if I'm touching hot water, I'll say that it's cold instead of it being hot. Again, I don't know why my mind does that. Maybe it's because I'm thinking about so much at the same time. But anyways, to continue here, what we have yet to see here for Bitcoin is the depressurization event. And like I've just pointed out and explained, every single time this depressurization event has occurred in the last 15 approximately years of Bitcoin's price history and trading, it has correlated with the end of bull runs, the most parabolic and explosive portions. Now, just to make it known, Bollinger Bands do not denote that this is going to, in and of themselves, as the indicator itself does not denote that it's going to break towards the upside or the downside. The pressure built up is ambiguous, doesn't discriminate. It's just going to go whichever way the broader landscape of the market, technically, fundamentally speaking, is going to draw it towards. But if we look here at the broader context here, as I pointed out with the historical depressurization events of Bitcoin, the historically compression state of the Bollinger Bands, the fundamental landscape, quantitative tightening coming to an end, plenty of other things which I have not mentioned, but I've gone over in past videos over the last few months. It all appears to be, looking at it as unbiased as possible, objectively pointing towards the notion that there is still at least one final move, and likely the most explosive and volatile move of the current bull run for Bitcoin. Looking here at this monthly chart, first thing I want to point out here is I believe this might be the 12 SMA. I have so many different ones that I forget. Yeah, so that's the 12 SMA on the monthly basically lines up with the what I shown as the 50 SMA on the weekly charts, and we can see here that this has been bull run support the entire monthly chart of the current bull market. And as I zoom in here closely, you can see that the monthly candle is sitting right on top of it. This even more so significant than the weekly close below 50 SMA. If we see a monthly candle close below this, then that is, again, not going to be good. I still think there's reasonability and potential around the idea that we might see November close below it. It'd just be a massive fake out to shake out retail, smaller players, for the bigger players, bigger money to get in at cheap prices below $100,000. That's a very key psychological price to understand as well. But this could, all in all, just be, again, a fake out event. We can also see that, which is actually something I lean towards. I think that's more likely than the bull run being over. You can see here that the monthly horizontal resistance here is being tested, which again is just approximately $101,000 or so. We've obviously wicked around, at this point, around $99,000, $98,000. As I said earlier on, it could definitely end up going lower. We look here at the 24 SMA. It currently sits at 82.5 thousand. So best case scenario is that we see Bitcoin come down and horizontally test the monthly here, horizontal support corresponding with the 24 SMA, and then from here we find a bounce towards the upside. That would be maximum pain. That would be taking things down to their greatest extent, so as to scare as many people as possible, particularly the retail, the dumb money, smaller money, and instill the most intense, most significant amount of just beyond extreme fear at that point in the market, all for, something like a V-shaped recovery would be the funniest way for that to happen. If we do see Bitcoin come down to around $82,000 or so, find horizontal support here into a V-shaped recovery upwards towards 150,000, 180,000, pushing $200,000 and higher, that would be a very funny scenario, given the fact that if you just look at the sentiment of the crypto space right now, particularly on the various crypto circles of X or Twitter, and to see how bad the sentiment's been terrible for many, many months. I mean, you could argue that the sentiment has been terrible since at least going back to here, basically since the beginning, roughly during this period at the beginning of 2024, which this is really when the kind of Bitcoin started to notably slow down here in the current bull run. We see these very gradual, short-lived chops, stair steps towards the upside, which here, as I was pointing out on that daily chart, we're seeing the overall, this would be kind of the ascending structure here, which at this point you can see that it's already been lost here if you take these candle closes here. But overall, generally, it kind of just seems to be some sort of ascending structure here that could potentially break towards the upside here, reaching the all-time historical Fibonacci patterns for the bear market retracements that I've gone over plenty of times. It's always hit a proximity of the 2.236, and that's yet to happen, which is somewhere around approximately $210,000. Lastly here, if we look at the 12 and 24 SMA pairs, you can see that it has predicted the bear market low going all the way back to April 2015, January 2019, and September 2022. So seeing that happen will, it's not guaranteed, but it will at least predict or denote a proximal bubble of time, as it did here in these instances, of the upcoming bear market low. What's also interesting is if we see just how close the 12 to the 24 SMA is here, these would likely cross over sometime, probably at earliest around roughly maybe a couple months before mid-2026, pushing into late 2026, I think at latest, which would mean the low for the bear market would probably be somewhere, again, around approximately $55,000 to $60,000, which doesn't make much sense. It's not really a bear market. Let's say if that were to happen from the current all-time high, that's only a kind of 50% move. I mean, that's not really bear market status for Bitcoin. I mean, as I've pointed out, the bear markets are becoming less severe over time, such as the bull runs are becoming less bullish over time. But a 50% pullback for the upcoming bear market, when the past one was at 77%, the one before that was 84%. One here was 86%. It just doesn't make much sense to see that big of a drop from 77% then down to 50%. But potentially, who knows, that could just be lining up with the more matured structure of Bitcoin. Maybe we're actually currently in the most extended bull run of all time, and we're going to see kind of a mini bear market down to the 1.618.5 here on the Fibonacci extension, down to somewhere around $50,000, and we'll see again just kind of picking back up here towards high 200, approximately $200,000 upwards towards $250,000 or so. Maybe we'll see kind of another mini bear market around 50% drop, and then we'll just again pick it back up, where ultimately we see Bitcoin in this macro, this very long, basically this uptrend would be the longest bull run so far in Bitcoin's history, and continually being agonizing in the sense that at this point, with just the drastic degree in structural change, it's nobody really knows what to expect. Not that you could really expect anything beforehand, but it's so different now in the current bull run as opposed in comparison to past bull runs that it's just, really more uncertain than I think ever before. And then there's also a flip side case against that as well, if you were specifically taking the fundamental landscape into account. But that was really all that I wanted to go over in this video. Again, here's the 12-month chart. Doesn't really say anything much, but I guess I may as well end the video here with the the highest time frame you can get to, and the trend that this points out, with the best being the third bullish year. Typically, this is the all-time high year. An all-time high has been set in price discovery. So again, bear market could be already on its way. It's already began. Who knows where it's going to top out? Maybe somewhere around $50,000 or so, $70,000 or so, maybe lower, down around $35,000, as I pointed out in that one chart earlier. But if the bull run is still intact, if these bullish structures, these walking the tightrope Bitcoin really is, if this is all going to hold up and find further support, then again we have the yearly uptrend structure here further finding confluence with around 170,000 upwards towards $250,000 or so, sometime around end of this year, Q1 of 2026, if things don't continue to be extended and extended and extended time and time after again, which maybe at this point that is exactly what we should all be expecting. But as I said, this is all that I wanted to go over in this video. As always, none of this is meant to be financial advice, but all of that being said and all else gone over, I hope you all enjoyed, and I hope you all have a wonderful day.